Be Wealthy and Smart, episode 1189.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the 10 most overpriced housing markets in the U.S. And interestingly, 5 of those are in Florida. This article comes to us from Go Banking Rates and was written by Gabrielle Olya. And it says, although the housing market is finally cooling down, there are some areas across the U.S. where the market remains hot and the buyers are still paying much more than homes are actually worth. Florida Atlantic University determined the most overpriced housing markets in the nation by comparing the average expected home values based on historical trends to the average list prices across the 100 largest metro areas and finding the cities with the largest percent differences between the two. Here's a look at the 10 most overpriced housing markets in the U.S. ranked from least to most overpriced. So the 10th most overpriced housing market is in Nashville, Tennessee. The average list price is $420,932. But the expected home value is only $296,827, or a difference of about 41.81% overvalued. Number 9 is Tampa, Florida. Average list price $361,000, expected home value $252,000, difference 42.9% overvalued. The 8th most overvalued city is Deltona, Florida. Average listing price, $334,000. Expected home value, $233,000. Difference between home value and list price, 43.74%. The 7th most overvalued market in the country is, surprisingly, Detroit. Average listing price, $226,000. Expected home value, $157,000. Or 43.97% overvalued. The 6th most overvalued city in the U.S., Palm Bay, Florida. Average listing price $345,000, expected home value $238,000, or an overvaluation of 44.99%. The 5th most overvalued city, Lakeland, Florida. Average listing price $303,000. Expected home value, $209,000. The difference, 45.16% overvalued. The 4th most overvalued market is in Memphis, Tennessee. Average listing price, $225,000. Expected home value, $154,000, for an overvaluation of 46.18%. The 3rd most overvalued market, Charlotte, North Carolina. Average listing price, $355,000. Expected home value, $240,000, or an overvaluation of 47.76%. The 2nd most overvalued market in the U.S. is Cape Coral, Florida. Average listing price, $375,000. Expected home value, $251,000, or an overvaluation of 49.67%. And the most overvalued market in the U.S. is in Atlanta. Average listing price $357,000, expected home value $236,000, for an overvaluation of 51.16%. Now, I think these statistics are very interesting, but my opinion about real estate is that we haven't finished this cycle yet. We're in a pause right now because interest rates have increased, but I also believe that we are close to the end of the Fed interest rate hike cycle. If the job numbers come in weaker today, if inflation declines, if we continue to have runs on banks, if consumer confidence continues to drop, there's a lot of indicators that the Fed is looking at to determine if they're going to raise interest rates again. But as I reported on the last podcast, the Fed changed their wording just slightly that made it sound like they're going to be very data-driven, so they're looking for the numbers and what the data is telling them about the economy, but also that they are more likely to take a little bit of a wait-and-see attitude, which tends to make us think more of a pause. Now, they have not talked about cutting rates at this point. But my belief, and I've said this for several months now, that we are going to get weakness into June, and that weakness will eventually cause the Fed to reduce rates again. This would not be an anomaly. If you look at the Fed when they have raised interest rates quickly, in the last couple of decades when this has happened, they've gotten to a point where they've had to come down the other side of that mountain very quickly. So they raised rates quickly, but then they got to a point where they had to decrease rates quickly. And I believe we will see that point in the second half of this year. And when rates come down, that's going to boost housing again. So I am not in the camp, never have been in the camp of a real estate crash. I am in the camp of no real estate crash. I'm in the camp that this is a pause in real estate due to interest rates, that once interest rates start to come down the other side, we are going to see a crazy boom in real estate later this year and into 2024 and 25. That's my personal opinion, that real estate is not over. We're in a pause here. And because it's so interest rate sensitive, that once rates come down in the future, we are going to see real estate prices go up again. But I wanted to share with you these overvalued markets because these are the markets you should be cautious about. These are the markets you don't want to go headlong and go crazy in. You still want to look for good value, things that are not selling too much over their traditional trajectory. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified of new podcasts as soon as they become available. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.